What can we say about gold, man? This price action just looks artistic. So let's go back in time and break down the October and November cycle. During this time period, we were able to close 13.53% in less than 1 month of return in our free CopyFX portfolio. So do you want to check how we did it? Okay, so the chart. Last cycle we traded around mid-October to mid-November, so we have around here. This was the start of a clear bullish trend. Gold created a big accumulation area. Just look at this price action, like it's really not good. This is awful actually. But after that we had a really unusual impulse here at market close. This was a very big candle. Remember, we are in 4-hour time frame. This was around 22 pips candle. Was very big. But we really don't care about this area, only riskers, scalpers, or really day traders chasing these ranges. Very risky for us, so then we match this area. Here price shows another big candle. This was during London Open, so we have a 10 pips candle, and then we have a pretty weak uptrend. This trend, the important thing is that we have a very big retracement. We have very good candles that show price weakness, but at this point we're not able to retest this level 1863. That is a very important level for us, because price didn't give us, it gave a very good retracement but didn't give us a 100% retracement, so we consider that market is trending already bullish at this point, but we are not trading. So also what make us take these decisions, not only the big candles we're having here pre-London, actually these two candles share something in common. It's pre and after NYC Open, and we have the CPI information that day, so really the data was very concerning for the investor. USA inflation continues to stick higher at this point, so investors are really hoping for, well, maybe panic, because the Fed can at the next meetings, we had a meeting pending at this point, they could raise the hikes. A new raise hike will be very devastating for investors at this point, so they will decide to push gold in this case, you know, naturally that's the response. So what's the important thing here? So as we mentioned, the CPI that they triggered this big impulse, so we consider this the first structure. It gave 65 pips before any retracement. This retracement was something we don't like, was around 24 pips. It's 38% roughly, or 38% of the total move retracement, so this is nothing we like. Bulls are in heavy control right now, so again we have another structure. This one gave us 54 pips. This one, it's a little bit different. We have a lot of indecision. This one was mainly triggered because of the CPI news. So here we have a lot of market players, a lot of sessions, so you can see the weakness of the move. And also we had a minor retracement. In this case we had also 24 pips. That it's roughly, it's a little bit more than this one, but it's also 43%. So we're not very happy with this one. So here let me do something. Let's mark this one. It's 1933. The price, it's a very important section, because as you can see we have another big impulse, especially at market opens, at New York opens. So this impulse created a 58 pip bullish run structure in this case, but this time we had a very big retracement. We had a 43 pips retracement that equals to the 70 to 77% of this structure. This level is a very good opportunity to start checking for sells, because as you can see this range is showing a lot of indecision. So these weeks, that's what you want to see when you are looking or chasing for big market retracements in this case. So again, we mark this point that will be, in this case, the price 1953 as the second break of structure. We have this one as the trigger. This is the main point we want, because at the end we mark our favorite zone. Actually, the rival of gold will be the 2000 area. Gold, as you can see, really hates this area. It's not only in this time frame or in this time period. We can see that in general, if we turn out to put a line here at 2000, I mean, it's not the first time that we got big rejections at this price. So as you can see, gold doesn't like to consolidate above 2000. So let's go back to the current analysis. So we have these three zones or three prices as the big break of structures area. So based on our strategy and the NRP that it printed at 1863, we had a bullish run of roughly 145 pips, maxing at 2009. Very solid movements for traders to not get trapped, but in reality many of the traders really expect gold to really fly from 2000. Like, they expect price just to go from 2000 to 3000. Like, that's crazy. That will never happen, especially when we have this kind of price action where we have not only one rejection, we have multiple rejections. We have this one, we have this one, and especially this one. This one, as we can see, it's not even a rejection, it's a total, we could say, investors running away from 2000, you know, because imagine here we are chasing the consolidation above, but the next candles just shows that gold is going down, you know, like this big candle is another indication. This last rejection is just weakness for the bulls, and after this roughly 145 pips bull run, we had 56 pips in around 13 days, so we can break the first structure level that we had marked here at 1953. We actually took profit around this area in 1980. We don't take the, well, we didn't took the whole move. Actually, it was very good for us because we had a very good set of trades, we can say. So we didn't have to stay too long in the market. Even though the move we were selling, the move was very good. It gave in total 77 pips. Yes, we can consider this as the lowest point gold has been until this bullish run. So it was around a 53% retracement. We consider break of structure here, but as we can see, it's very dramatic how the consolidation didn't last too long, roughly 3 days, and then we start to look again for big candles. So we have this one, and we have another candle here. This one is the one that takes back price to the range where we have a lot of indecision. That is this area, especially this area where the wicks are starting to form. We have 1965 to 1990 roughly as the indecision area or the range. Don't get trapped here, mainly because we waited for the market open to start this analysis, because as we can see, we have a very clear bullish trend after breaking our two main levels, and again we broke them, but again bullish. So it's common, don't get trapped. Gold usually likes to be bullish against dollar, especially we all know the situation. It's not only wars, it's not only debt crisis, it's not only interest rates, it's a mix of lots of in this case economic triggers that central banks, the Fed, the same government, everyone, they say at least, they're trying to fix. So in this case, don't take positions that will put in risk your portfolio. The next year we are expecting the Fed to start slowing down the interest rates. So you can see in this case, if we consolidate above, as you can see, we have a very good consolidation going on. This is the market open candle, the 4-hour candle. So if we manage to consolidate above 2000, yes, we are going to expect bullish action from now on until the next year, at least until January, February. So just be cautious in that situation. We have this mini bullish trend marked with this line, and also this level at 1985. The important level for us is 1971. That's when our algorithms start working again, but we're not trading yet. We're waiting for a better level. Maybe I'm going to wait, let's say, let me show you a good level. Here. So we're trading currently at roughly 2001, so I will wait at least another 30 pips at 232 to start trading again. Of course, we are going to short the market. We're not going with the trend. That's not what we do. So in this situation, let me clean the chart. It's important to keep our eyes in 1985 in case our retracement is actually a reversal, or let's just keep watching this resistance level. Well, in this case, it's acting as a support, but we know that 2000 is a natural resistance for gold, so just keep that in mind. In this case, also per fundamentals, let's go back to Forex Factory and let me go back to our week. So we have the last week of November, we have a lot of action. I don't care about anyone that it's not USD, so let me clear them all and just leave USD. And of course, we don't care if there's no volatility, so let's keep only the red and orange. We have a lot of news, especially we have the GDP. That's kind of important right now because we really want to know how USA is going, or how they're managing their situation, you know. Also the OPEC meeting, always important, and unemployment claims. After this Black Friday, there's a lot of rumors or a lot of uncertainty regarding the consumer sentiment and if USA is solid enough. So that will be it for the analysis of the day. This is the market open analysis, so we have a long week yet to trade. We will be uploading more frequently in this channel. We are planning to add some spicy EA backtests that work, especially the free ones, so we can share them with the general public. If you're interested, please give a like. Also follow us on Discord. You can join the server. We share a lot of information there. So that's it.